Welcome back to the show. Kenyan stock market made a decent comeback index return of nearly 20% last year, with the market value at about 15 billion US dollars. And there's more to talk about. In that particular region, let's bring back Aly-Khan Satchu. Ali, the CEO at Reach Management based in Nairobi. Thank you very much. You got the internet back very soon. And you were talking to me earlier, about 30 minutes ago, thereabouts on the show, about the Ethiopian Securities Exchange and how much political will of Prime Minister Abiy has been able to bring reforms for this particular market onboarding. Let's finish up on that very quickly.
Yeah, so I think, it's a very positive story. It's a giant leapfrog that we're witnessing in Ethiopia, which has not had a history as such of open financial markets, capital markets, or a stock exchange. So this is tremendous. This is a tremendous leapfrog. And I think, clearly they're looking to restructure the balance sheet. So I think if they're smart, they're going to bring some attractive companies to that stock exchange at the get-go. I would have thought Ethio Telecom and something like Ethiopian Airlines would be prime for that market to really excite investors domestically and internationally about the Ethiopian opportunity. And I think that's really key. They've got to come with the big bang. I think that's the next step.
So let's move on to where you are, the Kenyan market. Review last year for me. What were the key drivers of the positive performance despite the political hot wire that we saw, the protests around the Finance Act? How did the NSE manage to get about 18% index return for last year?
So 18% in, I think, local currency terms, higher because the shilling stabilized and recovered some. So it pushed returns in dollar terms a little bit higher than that 18%. The stock market the year before was deeply oversold. It had been battered, and we saw a rebound last year from these very low levels. The outperformance was in the banking stocks, which produced very handsome dividends and basically outperformed. So the stock exchange was really lifted by the banking performance, and a firmness has now come into Safaricom, which is the biggest market capitalization share at the stock exchange, further pushing the market higher. But really, for me, it was a banking story.
Yes, the banking story. Now we're getting the new year started with a 5-year suspension lifted on Kenya Airways, ran through like a hot knife through the border last week, and that continues today again. How are you looking at this iconic stock on the NSE?
Very interesting. A lot of shareholders had bought, I think it was the first IPO in Kenya. A lot of folks are holding that share. It has been suspended for, I think, 5 years. So very disappointed people, but now it's come back, and it's come back with a bang. I think, we've rallied very, very sharply since it's been reintroduced for trading purposes. Look, it's still got a very poor balance sheet. It's carrying a lot of debt. It's got loans from the government. But I think, there is a positive story that investors are looking at. There's a potential stake building by another Middle Eastern partner, for example. This would be an attractive way to get some African roots on board. So I think we should see, I've heard talk of a recovery to about as much as 10 shillings. But clearly, the price performance is the signal in all the noise. And so far, it's been very constructive.
It's the new year, Ali, but I'm sure some of the political noise of last year is still echoing into the new year under the current administration, as it were. The Finance Act, the budget, and a couple of other stories, relationship with Washington, the World Bank, and the IMF are all there, and how things will move forward with the central bank trying to look at interest rate and how much they need to slow a little bit in order to allow some growth to come into the economy after the billions of shillings that were results of that deadly protest last year. Where are we kicking off the new year on the political front and the economy, broadly speaking, into 2025?
You've asked a very broad question there, Boris. And look, I think, the politics remains very complex and still fragile, in my view. There continue to be significant protests and a great deal of unhappiness about a string of abductions, which culminated in the abduction of a Tanzanian lady yesterday, subsequently released. So, we're still in a fragile situation. There seems to have been some kind of pact at the elite level, accommodating ex-President Kenyatta's people, Raila Odinga in some degree. But however, we've still got this Gen Z protest movement bubbling under the surface. So, we've got to keep an eye on that. But for now, where the government has hit the jackpot has been really food production in the last 12 months has been very, very strong. This has kept a lid on prices, and inflation has meant people are not struggling to feed themselves. And I think that has been a very big pillar of support for the government. Had they not had that scenario unfold, lower inflation, affordable food prices, I think the problems that we've seen politically and on the streets would have been much worse. So I think there is room, if they step gingerly, to bring down local interest rates and give some relief to the consumer, some relief to the corporate sector. But they're going to have to do it very, very gradually, simply because, we got this big elephant in the room. This is an exogenous scenario with Donald Trump. And we've seen bond yields absolutely spike in the US. We've seen the dollar surge. And this, of course, is very problematical for African currencies and for African economies. So, it's a high wire balancing act that Kenya has got to undertake. As you correctly mentioned, the IMF and the World Bank were strong supporters of the Kenya government. This was really under the tutelage of the American ambassador Meg Whitman, one of the founders of Hewlett-Packard, and probably worth about half of the GDP of Kenya herself. But the point was, she was a very big proponent of Kenya's position. I think she arm-twisted the IMF and the World Bank. And the question now is the fact that she was a Biden appointee, she's gone back. Who will come now is going to be very key, I think, particularly in the relationship with the US and with the multilaterals.
Just a quick one. How do you think the central bank will decide in the new year as far as interest rates is concerned, Ali?
I think the central bank is desperate to guide interest rates lower, and I think the inflation rate, which is, if you look at it correctly, sub 5%, justifies much lower interest rates. But their borrowing appetite remains very big. Borrowing appetites all over the world, from the United Kingdom to the US, are completely out of control in many respects. But the point is, you've got to tread gingerly. I think, the only way to really get interest rates down is to throttle back on supply. And that would be the quickest way to do it, and something that the Kibaki administration did in 2002, 2003 very effectively. But this government needs the money, so it's unable to use that strategy. But interest rates, given the inflation forecast and the inflation outlook, should be 300-400 basis points lower. But clearly, the government's going to trade gingerly, particularly because they don't want to see the currency weaken at this time. With the oil price beginning to firm up, as we've seen in the last 4 weeks, up about 10%, good for Nigeria, not so good for somewhere like Kenya.
Okay, so on a final note, what's your outlook on Kenya and the East African regional markets so far this year? Tanzania seemed to be moving the needle, as well as Uganda as well. What should investors watch out for in the region?
Look, I think, the region, as we've discussed previously, has got political challenges. I think, we've got this very articulate, connected Gen Z generation who are nothing like their predecessors, their parents or their grandparents. And, they're ratcheting up demands. And the political class so far, I don't feel has been able to address their concerns and speak directly to them. So that remains a challenge. But and of course, as I said previously, all three countries, Uganda obviously won't be a big consumer, are consumers of oil. So we've got to keep an eye on that. But overall, I'm fairly optimistic. I think these economies are trundling at the bottom and are going to rebound more strongly over the next 24 months. And overall, I think, certainly we're going to have uncertainty with Trump. But at the same time, China, I think, is going to support Africa as a counterweight to the American challenge that it's facing.
Look, Ali, it's almost 10 o'clock in the evening. You've got to get to bed, my friend. Stressing a little bit tonight.
Thank you.
Thank you for staying up late tonight in Nairobi for this conversation. I appreciate those insights. Have a pleasant evening there, Aly-Khan.
My pleasure.